Students, today our topic is employment and fringe benefits. Then normally I used to say to you guys to say when you start a new topic, you need to understand why are you studying that topic? What does it have impact on your social being as an individual, as a citizen of South Africa? We need to know the implications. Why are we studying this? We cannot study for the sake of studying. So now the topic is employment and fringe benefit. You can clearly understand the word employment, meaning that there is someone who is working and there is an employer, meaning that there is an employee employer relationship. One must get something from the other. And in this case, is an employee to the employer. Then this is the course outline, the gross income definition of which we have dealt with. But in this case, we are going to look at paragraph C, I, and N of the definition of gross income, which those elements are payment for service rendered, paragraph C, fringe benefit, paragraph I, and paragraph N, which include allowances, advances, and reimbursement. Then again, we're going to look at travel allowance, vehicle list to employer by employee, employees tax on travel allowance, subsistence allowance, other allowance, holders of public office, and lastly, acquisition of asset at less than actual value. Then, here is our purpose: to identify and calculate the effect of fringe benefits on the taxable income and tax liability of individuals. Then one can ask, what is fringe benefit and what is employment? We'll come to that when we deal with that particular slide. Then there are provisions of the act, or which section are we going to deal with under this topic? We said paragraph C, which contains service rendered. And what are those services rendered? For example, these are remuneration or other income and by an individuals for service rendered, whether in cash or otherwise, which include salaries. Because when you work, there is a service that you have rendered and you have to receive something in return, a payment, whether in cash or otherwise. In this instant, it will be salaries, wages, bonuses, overtime payment, or commissions. And again, director's fees or management fees. Those are amounts that are under service rendered. And again, fringe benefit. It says taxable benefits derived by reason of employment or the holding of any office. Then the answer to what the question that I've raised earlier on what is fringe benefit. A fringe benefit arises when an employer provides a non-cash benefit or advantage to an employee as a result of employment. Remember, it says it's a non-cash payment, meaning that you are not receiving cash. Instead, you are receiving a right of use of a company car or a low interest or interest-free loans or free or subsidized accommodation, payment of personal expenses by employer. These are found in the 7th schedule of the Income Tax Act. These are benefit you don't receive as cash item like salaries or wages or bonuses, but instead you get or you receive the right of use of a company asset. That is a fringe benefit. Then again, we've got Section 8.1, reimbursement travel and subsistence allowance and allowances for holders of office. Then I'm going to explain what is a travel allowance. This covers amount paid to employee to cover anticipated or actual business expenses, which includes travel allowances. These are amount paid for expected business travel. Advances are paid in advance for travel or subsistence. You pay before you can go on that business trip. Reimbursement. You pay back to employees who incur business expenses for personal funds. For example, when you are an employee, an employer pays you something on his behalf, you need to have a receipt so that you can take that receipt to the employer for reimbursement, meaning that there's no tax implications because whatever amount you've used on behalf of the employer will reimburse you upon the receipt of that particular receipt. Then let's go to the deeper in the gross definition, because it says the gross income definition brings into gross income all amounts received, we know by now, for service rendered. And this includes any amount, including any voluntary awards received or accrued in respect of services rendered or to be rendered, or any amount that are referred in section 8 subsection 1, which are those allowances that we have spoke about. These are section 8.1, reimbursement travel, substance allowance, and other allowances. We'll talk about other allowances. What does it constitute? One is cell phone allowance or uniform allowance, but we'll talk to that when we continue. Then this is a fringe benefits definition. Compensation made to employee, usually in form other than cash. Can you see? There's a compensation, a token of appreciation to an employee, not in the form of cash. However, you have got the right of use of company's asset for business purposes only. It may be beneficial to employee because of different tax treatment of fringe benefits than cash salary. Yes, think about it. When you are a salaried employee, you'll be taxed according to the individual tax table. However, if the fringe benefit is the amount that is being given to you by the employer less the business expenditure, then the total amount will be taxed at different table, not like the cash salary. Because fringe benefit, it has some calculations. When the employer gives you the right of use of a motor vehicle, that right has got the monetary item attached to it or monetary value attached to it. If it is 50,000 on the amount of that asset, you only use 30,000 for business purposes, meaning that you'll be taxed on the 20,000, not the whole amount of 50,000. That's why they are referred as fringe benefits, not cash payment. Again, it does explain the same thing. Fringe benefits differ from normal remuneration and allowances in that they are not paid in cash. That's why they are called benefits, not payments. You will see when we continue how different it is between the salary payment and the fringe benefit. Look at our summary of individuals' tax liability. Gross income. Remember what we have said. We have said employment and fringe benefit are found in the definition of gross income. And we looked at paragraph C, I, and N. So meaning that whatever you received under those paragraphs must be included as part of your gross income. If there's any exempt income, yes. Income less deductions, pension, provident area already have dealt with under individuals topic, and the retirement benefits topic. And then you come to your taxable income. Then let's look at these allowances. We spoke about allowances. We said allowances are paid for expected business travel. And we are going to concentrate on three types of allowance: travel allowance, accommodation, and substance allowance, and other allowance by virtue of office or duties, e.g., entertainment allowance, cell phone allowance, uniform allowance. That's why it says by virtue of office or duties. Uniform allowance. There are those employees that are required to wear uniform when they are on duty. That's why that is called other allowances. Then let's define what is a travel allowance. A travel allowance is paid to an employee who uses their own vehicle for business travel, of which a portion of that allowance is taxable monthly in the form of pay as you earn, and the employee can claim a deduction in the annual tax return. That's why when you submit income tax return to SARS, there is a deduction in the form of PAYE, because that's the tax that you've paid on your income. Then it will be deducted when you submit your returns. Accommodation and subsistence. Accommodation. This most of the time it happens to employees who are working in construction companies or in mining industries, or officials, government officials. They are the ones that receive accommodation and subsistence allowance. Let me just talk or take you through to the employees who are working in the mining industry. Let's say the mine is in Cape Town, and there are different employees across South Africa who are working in that mine. So the employer then sees that most of the employees are residing far from the mine. Rather, let me either hire accommodation for them or build accommodation for them. And if I have to hire, meaning that I have to pay rental expense to that to the landlord, and it can be in the agreement to say who covers all the cost. The employer can say, I will cover 70% and the employee 30%, or the employer can cover all 100% of the expenditure. It will depend on the agreement between the employer and the employee. Then subsistence allowance. What is it? This is an allowance that is paid to an employee for business-related travel away from their usual workplace, and it covers meals, accommodation, and incidental cost. We will talk about incidental cost and how much is the subsistence allowance if you don't keep the records, because we have to keep the records. However, if you did not keep the records, SARS will use its own value for subsistence allowance, but we'll come to that when we reach that particular slide. Then these are allowances that we are going to deal with. Then it says Section 8 provides that the net amount of the following allowance must be included in taxable income. Look at this. They say the net amount, meaning that the amount of allowance less any expenditure that is being used for business purposes, then will be taxed on the different. That's why I said it's different from salaries. It says fringe benefits, they do have the different tax treatment when coming to remuneration salaries. In terms of allowance, employer will give you either 5,000 a month or 3,000, it will depend on the agreement. Then every month the employer will give you that amount of 5,000, and you will less any expenditures that you've incurred for business related, and the difference will be taxable. Can you see? You are not being taxed on the whole 5,000, but you are being taxed on the difference. But if it was a salary, then straight to the tax table, you will be taxed according to the tax table. Then subsistence allowance, we spoke about it, that you must be away for business related, either for a conference that benefit the company, the public officer allowance, entertainment, because there are some officials or some people within the company that their duty is to bring clients to the company. And most of the deals are finalized either in a coffee shop or in a golf course. You take a client to a golf course and you begin to talk business. And most of the people, they don't get business while they're on those activities or performing those activities. Then the question is, the car that you are using for travel allowance, should it be your own, or you must have a car? It must not supposed to be your own car as long as the car is readily available to be used when the employer needs you. It is most common types of travel allowance are allowances or advance in respect of transport expenses, or allowance or advance used to pay expenses in respect of a vehicle used for business. Students, travel are for business purposes. That's why it says there is a presumption. Look at this. There is a presumption under paragraph 2 that the vehicle is owned by the recipient, but it need not be. That's why I'm saying it is not supposed to be your own. If it is your own vehicle, then it's fine. But if you have borrowed from your father, your uncle, as long as that particular car has been registered with the employer that you are going to use this car for business purposes, then you can use that particular car. And again, there will be some paperwork that need to be completed and signed between you and the employer. Then the other question is it travel between employees resident and a place of employment private or business? It is private, because whether you receive travel allowance or not, you still have to report to work. Therefore, travel between employees resident and a place of employment is private. However, when you go from the place of business to another place of business, that would be regarded as a business travel. Let me just give you an example. Yes, Mr. Marcella, I'm leaving my place of residence to UJ. That portion of the traveling is private. However, when I am at UJ Soweto campus, then there is a workshop that need to be attended at APK or either one of UJ's branches. Then from UJ Soweto campus to UJ Auckland Park or APB, that is regarded as a business travel, because the purpose of my travel is to attend workshop, meeting, or training, which is the main focus of UJ to equip me as an employee. Let's look at the other types of travel, whether they are private or business. Look at this one. It says an employee whose place of employment is in Johannesburg leaves the office at lunchtime to attend a business conference in Krugersdorp. The travel between the office and the conference zone is Krugersdorp, of which it is a business travel. And again, a consultant stops to see a client en route to his place of employment, they travel between home and the client's business, and they travel after they meet from the client's business to the office. As long as where you are and you inform your employer that I'm going to see this particular client, meaning that that will be of business because you are going to engage with client on behalf of the company. Let's see, under travel allowance, we've got two types of travel allowance, which is fixed travel allowance and reimbursable travel allowance. What is the difference between the two? The fixed travel allowance is when an employer gives an employee a fixed amount per month or per year for business travel. It can be 2,000 a month, it can be 1.5, it can be 1,000. It depends on what type of work are you doing on behalf of the employer. And reimbursable travel allowance, here you need to have a logbook because it says where kilometers travel does not exceed 484 cents per kilometers, therefore not included in taxable income. Let's say the travel that you are traveling per kilometers is not 484. 484 cents is per what SARS is required of an individuals, where you don't use the fixed travel allowance, however you use the reimbursable. It is calculated on the number of kilometers you have traveled. Then anything that exceeds 484, then that amount will be included in the taxable income. For example, if it's 500 cents per kilometers, meaning that it would be 500 minus 484, the difference, it will be multiplied by the total kilometers traveled for that particular month. Then that will be included in your gross income. We will see when we come to the calculation, it will make sense when we come to the real practical question. This travel allowance, which is consists of two types, fixed travel allowance and reimbursable travel allowance, of which we have explained the two. Let's see, travel allowance. The interpretation note 4, it states that the allowance must be reflected the anticipated business expense of the employee. Look at the anticipated, because we have explained what is a travel allowance. It is an anticipated or the expected business travel. The purpose of interpretation, note 14, this comes from SARS, which clearly states that because SARS was of the view that most of the employees, they do abuse this allowance, or maybe they don't understand. So they want to make it clear to individuals that are using travel allowance on behalf of their employer to say the amount that must be included in your gross income, it must be so much of any allowance, whatever the employer is giving you, minus whatever the employee is paid for business purposes. Therefore, the net amount must be included in the employee's taxable income. Look what they say paid to the recipient. Whatever is being paid, and less the business expenditure, therefore that net amount must be included in an employee's gross income. You will see when we are dealing with that practical example. It says, as it's not actually expended on business travel. If it is not for business, then meaning that that private travel must be included. It will be taxed on the private because that amount or allowance is not meant for private purposes, but for business purposes. Let's see. Travel allowance, we've got the deemed rate method and the actual method. Then under the actual business kilometers, you need to have the logbook. And the deemed cost per kilometers, the table, meaning that we are going to use a table under the deemed cost method. These are two methods, the deemed cost rate method and the actual cost method. What is the difference between the two? The actual, meaning that as an employee, you'll have your actual business expenditure, the proof of the repairs and maintenance, the fuel. When you buy out of your pocket, you keep those receipts. That will be your actual amounts, meaning that you have to use the actual method to calculate the amount that must be included in your gross income. What about the deemed cost? Deemed cost meaning that you don't have actual figures. They just give you the scenario, then you work on that scenario using the table, travel allowance cost table. Guys, I'm going to repeat these two types of travel methods. We have got the actual cost method and the deemed cost method. The difference is, let's look at the first one, the actual. This is the actual cost method, meaning that when you are given a scenario where there are actual figures, actual expenditures incurred, then you'll be using the actual cost method because you are provided with the expenditure with the amount. For example, the repairs and maintenance, the amount of it, when you pay for fuel or petrol, you will get the slip for that. That will be actual expenses. Then you are required to use the actual cost method. There is another method, the deemed cost method. The deemed cost method is when you are not given the actual figures. You are only given the value of the vehicle, travel allowance from the employer, and the total kilometers traveled, meaning that both the private and the business, then you can only use the travel allowance cost scale under the deemed cost method. Let's now look how logbook looks like, because we are saying those kilometers that you have traveled, they must be shown on a logbook. Logbook looks like this, guys. It says the date of the travel, then the opening kilometers. Before you go to a client, you record the opening. Then when you come back, you record the closing kilometers, meaning that for that particular period, you state how many kilometers did you travel, from where to where. That's why it says business travel details. Travel allowance and fringe benefits are used for only business purposes. That's why they say business, not no private. And the reason for travel, who are you going to see and for what reason? Then the actual fuel cost. If you have paid petrol on your way to see a client, then you will state the amount. Then at the end of the month, you calculate. Then if the total kilometers traveled for that particular month is 20,000, then out of 20,000, then you calculate what is for business. Then the logbook will tell you what is for business, that meaning that the rest will be for private. But we are concerned with the business kilometers. Why are we concerned? Because the business kilometers reduce our travel allowance that the employer is giving an employee. This is the travel allowance cost scale, where I've stated that you only use this table when you are required to calculate travel allowance under the deemed cost method. then you will use this table. I will show you how to use this table. Very easy to use this particular table. Then look how to use a table. It says using the table to determine the deemed cost per kilometers. What you must do, you need to add the fixed cost per kilometers, and the fixed cost, you can only determine the fixed cost when you have the value of the vehicle. The fuel cost and the maintenance, you can only get this from the travel scale table. Easy to get this amount. Then they say the value of the vehicle is the cost of market value plus VAT, but excluding finance charges. Of course, finance charges is not part of the value of the vehicle. Then again, fixed cost. That's why I said fixed cost, you divide the total kilometers traveled. Then if the vehicle was used less than full year, reduced fixed cost proportionally use days. Guys, I'm not saying use months, I say use days. For example, you have been given a travel allowance to use the vehicle for a full year from the 1st of March until February 2025. Then you only use that particular car in the month of March, and in that March you only use for 10 days. So meaning that you are going to proportion that particular travel allowance because you did not use the car for a full year, but you have used that car for a number of days in a year. Because when you look at March, March has got 31 days. Then in the 31 days, you only use for 10 days. It will be 10 over 365 because 365 represents a full year. However, the car was only used for 10 days in March, or it was used for 60 days or 100 days in a year. Then it would be 100 days over 365. The fuel and the maintenance, you obtain them from the table. These are very important steps, only 3 steps on how to calculate the deemed cost method. The first step, the fixed cost. How do you get the fixed cost? You must get it through the value of the vehicle. Let's say here the value of the vehicle that says is 800,000. And we know that 800,000, it falls between 700 to 800, meaning the fixed cost is 215, 444 rands divided by the total number of kilometers traveled. Total number, meaning that you add both the private and the business. This information, it will be given in the scenario. Then fuel cost, maintenance cost, they say you add them together to arrive at the deemed rate per kilometer. After you've added these amounts together, you multiply by the business kilometers. Again, it will be given unto you. Whatever you do in the second step is what you have calculated above in the first step. And the last step is where they ask you how much must be included in Mr. A's taxable income. Travel allowance received, and again, you'll be receiving this amount in the scenario provided. If it is 2,000 per month and the car was used for the whole year, it would be 2,000 multiplied by 12, of which is 24,000. It's an income because it says received. Someone has received something. It forms part of your gross income. Less deemed business expenditure. Look at this. Already you have calculated the business expenditure under step 2, you just take and put it here and amount to be included in the taxable income. Let's just repeat, guys. It says for travel allowance and fringe benefits, you are only taxed on the net amount. That's why they say it's different from salaried individual, because under travel allowance or fringe benefit, it's what the employer is giving you and what you have spent for business expenditures. Then the amount that is left, that will be amount that must be included in your taxable income. You are not taxed on the amount that is being received. However, the amount being received less business expenditures, then will be taxed on the net amount. Let's see in the form of this example. This is the deemed rate method. It says Mr. A uses his car for a full year for business and private purposes. The cost of the car is 105,000. I said for you to get the fixed cost on the table, you need to have the value of the car. We have got the value of the car. Mr. A's employer pays him a travel allowance of 2,800 per month. Can you see? This forms part of your gross income under paragraph N, I, and C of your gross income. It says per month, meaning that it will be 2,800 multiplied by 12 because the car was used for a full year. Mr. A kept a logbook of business travel. Total kilometers traveled by Mr. A during the year was 27,000, of which 7,000 were for business purposes. Yet, it's what I've illustrated to you to say, under the actual cost method, you'll be given only 3 things. Then you'll know that I have to use the deemed cost method. The first one is the value of the car. The second one is the travel allowance. It can be either a month or a year. And the kilometers traveled. Because when they say the total amount of kilometers traveled is 27,000 and 7,000 is for business, meaning that 20,000 is for private, but we are not concerned. This information for kilometers, it is only found in the logbook. Because when you are using your car to perform an employee's business, you need to keep logbook. Otherwise, you will lose this benefit, the business expenditure, you will lose them. Then the question is, calculate the tax-free portion of the travel allowance for the 2025 tax year of assessment. Look at this. This is the deemed cost method. Why is it deemed rate method? It's because we don't have actual expenditures. In this instead, they didn't give us the cost of the petrol, the cost of the repairs and maintenance. We don't have those things, expenditures. That's why you can easily use, or you can easily identify which method need to be used. In this case, is the actual, it's the deemed cost method. Then the first, look at the first step. They say calculate the deemed rate per kilometers, where you take your fixed cost, you divide it by the total number of kilometers traveled. Then I said, for you to get fixed cost, you need to have the value of the vehicle. This is how we calculate our fixed cost. It says based on the value. The value of the vehicle is 105,000. Look at this, guys. The value is 105. Then we need to go to our tax table, because we said when you use the deemed rate method, you need to consult your travel allowance scale table. The value is 105. Let's go to our table for us to determine how much is our fixed cost. It's 105. They said the value is 105, which is, it belongs here. It belongs here, our value. Meaning that our fixed cost is 61,770 divided by the total number of kilometers traveled. And in the same line, there is fuel cost of 169. There is maintenance cost of 57.6. I want to show you something. Look at this, guys. Then this is what we have done. The fixed cost 61,770, of which we got this from the table based on this value of the vehicle. And we need to divide it by the total number of kilometers traveled. The total kilometers, they told us that he traveled 27,000 kilometers a year. It's what we have told. Yet is, guys, total kilometers traveled by Mr. A is 27,000. And it says you take the fixed cost divided by the total number of kilometers traveled, meaning that it's both the private and the business, multiplied by 365 over 365. What did I say? I said it must be in days, because the car is being used for the full year, meaning that it's 365 over 365. Then times 100 cents. One may ask, why 100 cents? Because we want to convert fixed cost into cents, since the fuel and the maintenance are in cents, meaning that we want to compare apples with apples or oranges with oranges. So because we are comparing same thing, look at this, guys. The fuel cost, they are in cents. Fuel cost cents per kilometer, maintenance cost cents per kilometers, but look at the fixed cost is in rands. Therefore we need to convert fixed cost into cents. This is how we do it, so that we compare apples with apples. This is our first steps. First step, they say you calculate the total deemed rate. We have calculated because we have added the fixed cost, we have added the fuel maintenance, we have added the maintenance. Look at this. It says calculate the deemed rate per kilometer and add together. We have identified our fixed cost, of which is 61,770 based on the value of the vehicle, divided by the total number of kilometers traveled, of which is 27,000. The fuel cost, yes, from the table 169.57. One can ask, where did we get 169.4? Why? How did we get 57.6? It's easy, because on the same line where we got our fixed cost, it's 169 for fuel, it is 57.6 for maintenance. Then we add them together. It's what it says. After adding them together, you need to apply the second step, of which you take whatever you've added in step one, multiply by the business expenditure. This is the second step. Second step, this is the first step, this is the third step. Then the second step, they say, take the business expenditure, multiply by the total deemed rate. Already you have calculated the deemed rate. You just take the business kilometer expenditure, of which it was given. Look at this. They say, of which 7,000 were for business purposes. Then you say 7,000 multiplied by 455.78, or you can say 455.78 divided by 100. You will get 31,904 point something, but round off to the nearest one decimal number, then you'll get 31,905. And even in the test exams, you will be given this instruction. Therefore, the last step is to calculate how much it must be included in the Mr. A's gross income. Travel allowance, it was given, they said 2,800 per month, but the car was used for 12 months. Then it will come to 33,600. Then it's where our general gross income definition comes into being, because they say this is through service rendered. This particular employee rendered a service on behalf of the employer, and he was given travel allowance of 2,800 per month. But because it was used for a year, it will be 2.8 multiplied by 12. Less business expenditure. Already we've calculated this above. This is this amount, 31,905. This is the amount, same amount. Then the amount that must be included is 1,695, meaning that you have got a benefit. Instead of SARS taxing you on the amount of 33,600, they only tax you on 1,695. Guys, does it make sense? Because they say this is different from a salaried person. Because when you receive a salary, you'll be taxed according to the individual's tax table, of which there's no any benefit. But travel allowance and fringe benefit, that's why business expenditure, meaning that it benefits you. That's why it says fringe benefit, because it does benefit you. You are not paying tax on 33,600. However, on the net amount of which it stated that the net amount of 1,695. Let me just show you, just to recap. It says Section 8 provides that the net amount, that is the amount of the allowance less allowable expenditure for business purposes of the following, must be included in the taxable income. Look at this. What we did, we took the amount of allowance that the employer was given to an employee, of which is 2,800 multiplied by 12, less business expenditures. Then the net amount must be included. Can you see? Then now again, we have answered this statement. They say may be beneficial to employee because of the different tax treatment of fringe benefit than cash salary. Yes, because under fringe benefit, there is a benefit that is given to you by the employer, which forms part of a gross income. There is a business expenditure that you have incurred, which must be set off against the benefit. Then the net amount must be included in your gross income. But a cash salary straight to individual tax table, then it will be taxed accordingly. Guys, does it make sense, guys? The difference between a salaried employee and a person who receives travel allowance and fringe benefit. Does it make sense, guys? The explanation. Guys, are you still with me? Likona, are you still with me? You can put the comments in the chat box, guys. Thanks, Jessica. Thanks, Botelo. Yes, let me just continue, guys, but I'm still going to give you just 10-15 minutes for questions. Thanks, Likona. Then the next method is the actual cost method. We have dealt with the deemed rate method. Now is the actual. Look at this. They say under the actual method, the value of the vehicle is limited to 800,000. It doesn't matter whether your car is Bentley, Ferrari, is more than R1,000,000. It doesn't matter. It must be limited to 800,000. Why it is limited? It's because, look at this. Our travel allowance cost scale is limited to 800,000. That's why anything above 800,000, it doesn't make any difference when we use this table. Even though it's R1,000,000, we are still going to use fixed cost of 215. We are still going to use this fuel cost and the maintenance. That's why they say it must not exceed, or it is limited to 800,000 because of this table. Wear and tear over a period of 7 years. Then again, they said the wear and tear must be limited to the value. The finance charges limited as if the vehicle had a cash cost of 800,000. And again, you take the ratio of business kilometers divided by the total kilometers applied to calculate the business cost. This is very simple when we look at the practical example, because we are going to take the practical example and link to this theory. It must be linked to this theory. And the questions to you guys, there's a wear and tear. There is a difference between wear and tear and depreciation. Are we together, guys? Because a wear and tear is a tax depreciation, not accounting depreciation. I don't know if you get me, guys, because wear and tear is a tax deduction allowed by SARS for the reduction in value of a business asset over time, whereas a deep accounting depreciation is a non-cash expense recorded in the financial statements to allocate the cost of an asset over its useful life. And the purpose of wear and tear is to reduce taxable income. However, for accounting depreciation, the purpose is to reflect asset use and cost allocation in financial reporting. That's the difference. And there's a lot of difference between the two. Then you will see the difference when we look at a practical example. Let's see the steps to follow. Each method has got steps to follow. Under the deemed cost method, the first step is where you determine the fixed cost over the total number of kilometers traveled. You add your fuel cost, you add your maintenance cost. The second step, whatever you've added in the first step, you multiply by the business expenditure. That will be your second step under the deemed cost method. And the last step is where you answer the question of how much must be included in an individual's gross income or taxable income. It will be travel allowance received minus less business expenditure. Then you come to the amount that must be included, the net amount. However, under the actual cost method, you only use the actual figures provided to you. The steps is take the actual kilometers traveled for the year, less actual business private travel, actual business travel proved to the satisfaction of the commissioner, meaning that you need to have proper documentation to support your expenditure. It says the ratio of actual business kilometers traveled to total kilometers traveled is applied to the total cost to calculate the business costs. Let's see. This is an example. Mr. A receives a fixed travel allowance of 1,800 per month for a vehicle costing 319,200. For the year of assessment, he traveled a total of 20,000 kilometers, of which 5,500 kilometers were for business purposes. He had paid cash for the vehicle. Then, here they are giving us the actual expenditure. The wear and tear, already they've calculated this for us. 45,600, the license 500, insurance for that particular car for the whole year, the fuel and maintenance. Look at the total cost is 66,000. And look at the previous slide. They say you take the actual business kilometers traveled to total, meaning that you take them, you multiply by the total kilometers. It's applied to the total cost to calculate the business cost. Look at this. We have got the first, we have been given this, and I can be given the actual cost. Meaning that because you have actual figures, then you have to calculate them under the actual cost method. How to do that? Travel allowance is received of 1,800. It is. This employee was given 1,800 per month, and the car was used for the whole year, meaning that it will be 1.8 multiplied by 12. Again, guys, think about the gross income definition. Whatever we received form part of your gross income, and whatever you have spent for business purposes is section 11A, because that expense was incurred for business purposes. Less business costs. Look what they said. They said you take the actual business costs. Let me just go back. It says for you to calculate the business cost, you take this. You take this applied to the business kilometers of 5.5 divided by the total number of kilometers traveled for you to get the business cost. Is here. I'm not lying to you. It says take the ratio of actual business, of which is 66 100, multiply by total kilometers traveled, which is applied to total cost to calculate the business cost. We are taking the actual business cost multiplied by the business kilometers divided by the total number of kilometers traveled. You get this business cost. Then the taxable portion, 3,422. Can you see? Why? Sorry, guys. Do you mind to share with us, LA? Let's continue. That's the difference between the two methods. Under the actual, you are given the actual figures that you have incurred for business purposes, and you take the actual business cost multiplied by the business kilometers, of which is 5.5, divided by the total number of kilometers traveled. Then you get to the taxable portion, meaning that this 3,522 must be included in your gross income. Then this is another example under the actual cost method. But in this case, the value of the vehicle is more than 800,000. I said for this method, the value, it does not matter if it is more than R1,000,000, because it must be limited to 800,000. Now, in this case, the value is 810,000, of which it's more than the 800,000, where SARS says it must be 800,000, not more than that. But in this case, it is more than 800,000. How are we going to calculate this? Very simple. It says Mr. B uses his car, which he purchased for 810,000 on the 1st of March 2024 for business purposes. Finance charges incurred on this acquisition or on this purchase amount to 3%, meaning that they've given Mr. B 3% on that value of the vehicle. Then he paid 6,000 for fuel. This is actual figures. And maintenance, 6,000 for fuel, 2,280 for maintenance, and 800 for the license, and 2% based on the value of the car for insurance. Mr. B is not a vet vendor. He receives a travel allowance of 90,000 per annum. He traveled 40,000 kilometers in total, with 21,000 being business kilometers for the full year. The question is, calculate the travel allowance to be included in Mr. B. Let me just take you a step further. It says finance charges limited as if vehicle at a cash cost of 800,000. What does it say? And again, it says the insurance 2% based on the value of the car for insurance. Then this is our calculation. The travel allowance, they say is 90,000 per annum. We don't have to calculate. We just have to put it because it says per annum, not per month. They've given us the total kilometers travel, of which is 40,000. And out of 40,000, 19,000 represents private kilometers, and business kilometers are 21,000. Look at this. Finance charges, 800,000. Is there something funny? Masiwa, is there something funny? You are disrupting. Please. Then finance charges 800,000 multiplied by 3%. Fuel, it is given. Maintenance, it is given. License, it is given. Insurance, look at the insurance. Why insurance is not limited to 800,000? Guys, tell me in the chat, why 800? Remember, they say it must be limited to 800,000. Finance charges, they told us. They say finance charges limited as if the vehicle had a cash cost of 800,000. And here we can see it. Finance charges is 800,000. However, the value of the car is 810,000. My question to you is, why insurance is on the full value of the vehicle? Warranty is 800,000, and again, it's limited to 800,000 divided by 7 years, because 7 years represents warranty. It says the value of the vehicle is limited to 800,000, warranty over a period of 7 years. It's what it explains here. The total actual cost is 163,566. Let me just tell you guys, if you didn't put anything in the chart, okay. Remember, you don't want to run a risk of under-insuring your car, because if you insure your car with the value of 800,000, if something happens, an accident, meaning that they're only going to cover for the value of 800, not 810. That's why on the insurance, you cover the whole amount of the vehicle, because you don't want to be underinsured, because there is a risk. If you are underinsured, meaning that you are going to pay excess out of your pocket, then the actual cost is 163,000. Look at this. Travel allowance, it is given 90,000. The business, it says take the total actual cost of 163,566 multiplied by the business kilometers divided by the total number of kilometers traveled of 40,000. The business cost is 85,872, meaning that the amount that must be included in Mr. B's taxable income is 4,128 francs. Let's look at another type of travel allowance. We said we have the fixed and the reimbursable. The fixed is where an employer gives an employee a fixed amount per month or a year. But under the reimbursable, look at this. It says kilometers actually traveled multiplied by the rate per kilometers paid by the employer. less rate per kilometers based on a simplified method. This type of method is a simplified, the reimbursable travel allowance. Look at example. It says during the month, the employee travels 260,000 kilometers for business purposes and is refunded by the employer at 484 cents per kilometers. Then 484 multiplied by 260 kilometers is 1,258. Meaning that this does not form part of the remuneration for employees tax because it must exceed 484 for that amount to be included in the gross income. But because it's the same as the amount that is being preferred by SARS, that's why it says does not form part of the remuneration. However, look at the second example. 550, it does exceed 484. That's why it says 550 minus what has been preferred by SARS multiplied by 840 kilometers. Because this employee travels 840 kilometers. Then, meaning that, look at this, 840 multiplied by 5.5 form part of the remuneration because 550 is more than 4.84 cents per kilometer. Let's look at the vehicle list to an employee, by an employee. Meaning that I am Mr. Marcel, I've got my own car, but I'm renting my car to my employer, which is UJ. Then what happens in that particular instances? It says any motor vehicle which is owned or leased by an employee, his spouse or his child, whether directly and indirectly by virtue of an interest in a company or trust or otherwise, has been led to the employer. The rental and look at this, the rental and any expenditure paid to the employer is deemed to be an allowance. The rental, meaning that it's not rental income as it must be, or any expenditure like it must be. However, they say any rental income and expenditure are deemed to be allowance. You will see in the example. In addition, the rental is deemed to not have been received by or to have accrued to the employee for the purpose of the act. By deeming the rental not to be received or accrued, the provision effectively prohibits the deduction of any expenditure, meaning that it prevents the deduction of any expenditure incurred by the employee. The rental paid to the employee is deemed to be a travel allowance. Look at this, very interesting stuff. It says, Mr. A, an employee of XPTY Ltd, enters into a lease agreement in terms of which a car, which has a market value of 100,000, is leased on a full maintenance basis for 4,000 per month. He then subleases the car to XPTY for 4,000 per month. XPTY pays for all fuel. Total kilometers for the year are 25,000 and business kilometers are 7,000. Look at this. Rental income, not taxable. Lease rental, not deductible. It was supposed to be an expenditure. Rental income is supposed to be rental income. But look what they're saying. It says the rental and any expenditure paid by the employee is deemed to be an allowance, meaning that the rental is deemed not to have been received. That's why under rental income, there's nothing, because it says it's deemed not to have received. And again, any expenditure is deemed not to have been incurred. That's why there is nil. There's a car allowance, 4,000. Yes, for the whole year. It was used for the whole year. And 750 for the whole year. 57,000 less business expenditures. We are given the value of the business kilometers. These are kilometers, km. These are kilometers. Then business kilometers 7,000. Then the question is, how did we get to the figures of 183.92? Remember what I've said. When you calculate the deemed rate, you must have the value of the vehicle. And because we've got the value of the vehicle is how much? Let's see again. The value of the vehicle is 100,000. Then let's go to our text table. Let me just show you before we go to the text table. It says our fixed cost is 34,408, which is based on the value of the vehicle. Let's go to the table just to make sure that we are on the same page. The value of the vehicle, it says 100,000. The fixed cost is 34,480, meaning that we are right. 34,480 divided by the total number of kilometers traveled, multiplied by 365 over 365, multiplied by 100 cents is 137. Maintenance is 46.0. Let's see if the maintenance is 46.0. Can you see on the value of the car that costs 100,000, the full maintenance is 46.0. However, there's no maintenance. Look at this. There's no fuel. Why there's no fuel? Because they're saying fuel is being paid by the employer. Remember, you cannot claim something that you have not paid for. It says, yeah, XP12 pays for all fuel, meaning that as an employee, you cannot claim that the fuel part of it because it was not paid by you. Then our deemed rates 183.92 cents is how you get to this figure. 183.92 cents. The amount that must be included in your gross income is 44,126. Then employees tax on travel allowance. They pay as you earn. We spoke about this under the reimbursed travel allowance to say part of the portion, if you have traveled more than 484 cents per kilometers, then the difference is subject to pay as you earn. It can only happen if you satisfy the employer that you have used 80% of your travel as business. Then if you've used 80%, meaning that you will be taxed on 20%. But if you use 20% for business, then you'll be taxed on 80%. It's vice versa. Only if you can satisfy your employer that you have traveled 80% for business, then you'll be taxed at 20% for PAYE, pay as you earn. Then the subsistence allowance. We spoke about subsistence allowance and we said, what is subsistence allowance? We said subsistence allowance is paid to an employee for the business-related travel away from their usual workplace, which covers the meals, accommodation, and incidental costs. Then let's look at it. To cover personal subsistence and incidental costs, employees required to spend at least one night away. This is the prerequisite for you to receive subsistence allowance. You need to spend at least one night away from your usual place of residence for business purposes. Deemed expenditure. Amount actually incurred in respect of accommodation, meals, or other incidental costs must be proved. If you cannot prove in the form of a receipt or an invoice that you have spent this much on the business trip, then SARS will use the following method. If no proof within South Africa, it would be 169 per day if the allowance is for incidental cost, and 548 per day if allowance for meals and incidental costs. Look at this. What is incidental costs. I'll give you an example. Let's say Mr. X is traveling to Devon, from Johannesburg to Devon for business meeting. Then you go to OR Tambo International Airport. You've got your luggage. There are those people who assist you with the luggage from point A to point B. Then sometimes you pay them as a token of appreciation. You appreciate because they were helping you. You are not forced to, but because you've got a good heart, then you give them something that is an incidental cost. Then for meals, whatever you pay or whatever you eat a day, it must be 5.8, not more than that. Because if it's more than that, meaning that you need to have a proof for that, so that the employer can reimburse you. It says allowance must be paid on an ad hoc basis, not part of the employee's remuneration package. What does it mean? Meaning that if the employer is giving you travel allowance or substance allowance, remember, it's not part of your package, because any given time, the employer can choose anyone within the company to go and represent him. That's why it does not form part of the employee's package. Only when it happens, then you are given that substance allowance. And for that particular time, not every now and then, only when you represent the employer on a business trip. Let's see, this substance allowance, Mr. Truder was away for 5 nights. And in the first example, he was given 2,000 per night to cover his accommodation expenses. Mr. Truder kept a record of his accommodation expense amount to 6,000. Then look at this. 2,000 for 5 nights is 10,000. But he can only prove that he spent 6,000, meaning that the amount that must be included in his taxable income is 4,000. Again, it is an advance of 12,000 to be spent on accommodation. Mr. Truder only kept a record of 7,000 in accommodation expense and returned 2,000 to the employer. Look at this calculation. Amount that he was given is 12,000. Amount which he can prove 7,000. Amount recovered by the employer is 2,000, meaning that it can only be taxed on 3,000. It says a loss cannot be created by the allowance. Costs are limited and are limited to the advance or allowance. There won't be any loss. If it is 1,000, it must be limited to 1,000, not more than that. The subsistence allowance tables do not apply to accommodation allowance. So usually an employer pays this cost directly. Yes. For example, I know at any institution, when you go on a business trip, the employer pays that in your bank account. Most of the time, they pay it before you leave. If it is late, then you need to use your own money, but you will recover when the employer pays directly in your bank account. Here is a summary of subsistence allowance. Expenditure actually incurred. If you've got supporting documentation, then that will be your business expenditure. You deduct them from your subsistence allowance received. If you don't have proof, then the commissioner will use that 169 per day and 548 per day if it is for incidental and accommodation. Then taxable benefits derived by a reason of employment or the holding of any office. What is acquisition of asset less than actual value? For example, if you are an employee of VW or Isuzu, those retailers. Most of VW employees, they can get the car less than its actual value. The difference between the original price and the less actual value is a fringe benefit, because there is a relationship between the employer and the employee. In another ways, it is a discount which benefits an employee. But if there is any person who is not an employee, then you'll pay the normal amount on that car. Acquisition, for example, let me just tell you an example of in huge our canteen. Mam Ratua, she's selling. Let's say the value of quota is 15 rand. You students will buy at 15 rand, but her employees, they can get either at 10 rand or 13 rand. The difference between 15 rand and 13 rand, which is 2 rand, is a benefit in the hands of the employee. Then it says, how do you calculate this? Is taxable benefit determined value minus consideration paid by the employee. Whatever the employee has paid, then we deduct it. Then amount tax in the employee's hands. An employee gives an old welding machine which had a cost of 5,000. The machine was a fixed asset of the employer and has the market value of 2,000 when it is given to an employee. Fringe benefit is 2,000. Remember, it's a fringe benefit because the employer didn't give it to the employee with this amount of 5,000, but with 2,000. Meaning that the market value of 2,000 is a benefit in the hands of an employee. The last slide is bravery and long service award. The question is, what is bravery and long service awards? I'll give an example. Let's say under long service awards, it says, let's read it first before I make an example. It says, use market value or cost on second-hand or new asset, reduced by the lesser of 5,000 or aggregate cost of all such awards given to an employee during the year. Long service is initial unbroken period of service of not less than 15 years or subsequent unbroken period of service of not less than 10 years. For example, yes, Mr. Master is working for UJ. Working UJ for 9 years. On the 10th year, then I resign and join University of Witwatersrand. Then later, in 2 years' time, I come back to UJ. I spent 5 years with UJ. Can you see 9 plus 5 is 14? But because it's broken years of service, it's not, I don't deserve a long service award because I've broken the years in between. But if I worked 10 years consecutively without any break, then I deserve a long service award. Then because it is a fringe benefit, they say whatever amount you are receiving, you less 5,000, meaning that you are not taxed on the first 5,000 because it's a benefit as an employee. Bravery award. Bravery award. You are in a manufacturing company, you are working with machinery and everything. Then where that warehouse, let's say it caught fire, and you happen to see that there are some employees that are in that warehouse, you ran and quickly take them out of that burning warehouse. That is a sign of a bravery. For you to be brave, you perform a heroic act, then you are entitled to this particular award, bravery award. Let's see in the form of example for you to understand it. It says, during the year ended 28 February 2025, an employee gives an employee 3 assets as bravery awards. The cost of these assets, net of VAT, is 3,000, 2.5, and 7,000 respectively. The amount during the employee's gross income in respect of 3 hours is, look at this, they say reduce by lesser of 5,000 or aggregate cost of such hours. The aggregate meaning that you add all those hours for that particular year, you less 5,000. This is a benefit because you are not taxed on 12,500, but you are taxed on 7.5 because it is a fringe benefit. It must benefit you as an employee because of what you have done. You showed an act of bravery and again, long service hours. You've been with this company for quite a long time. They say out of 12,500, 5,000 is yours. Enjoy it. You are not being taxed on this amount, but will be taxed on the net amount. Guys, this is the end of our session. And please let me know if you have got questions. We've got only 9 minutes, guys, for questions. And again, please go and have a look on these slides. And again, I've posted the practical question on Moodle. Go and have a look. And please try to attempt it. Because when we meet on Wednesday, please, guys, I'll be expecting, questions. And again, if you need any clarity, then it will be good if you have attempted it. I've really said, second, we have the scope for test one. Yes, I've posted, guys, on Moodle. It's on Moodle. The breakdown. It is on Moodle, guys. I'll just share with the tutors to share with you. Any questions, guys? It's on Moodle.